If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to go ahead and get you lined up for the coming 5 days on the markets. We're going to do some live trading and talk a little bit about Monday psychology, how you should be approaching your trading week as we roll into the 34th trading week of the year. Full disclosure, a little bit under the weather today, so I will go as far as I can. But if we do have to sort of kick off a little bit early, that's just sort of the way it's going to be today. But I did want to start an hour earlier. Got some other things sort of brewing. Tomorrow we should be back to normal with that broadcast schedule at 1 p.m. Eastern. But I do see some good live trades for right now, so let's get right out to price action. XAUUSD, we're going to go ahead and start off with this spot gold market. You can see we were really betting on that bearish breakout. Nice big sell-off, looking to get that break. Then it just didn't occur. We saw a reversal anyways, and you saw us testing this level right around 38% right now. So let's go ahead and go down to a 1-minute chart, and you can see exactly what neighborhood we are in. We are right at our key level. So if we were looking to sell, maybe put a sell play together here for this gold trade, we could definitely be looking to do something a little bit like this, right in front of our long-term macro level. It's a pretty good trade. We probably should have already gotten it. But we can't really control what time we actually go live here on these live streams. But we should have pretty much, this is the second or third test of this zone. But I don't mind the opportunity potentially to get the short. I think we're going to have a great opportunity here. We should have just been filled. Are we filled yet? Are we in the market yet? That's one of the things that you find when you're dealing with a spot gold market. See, we didn't even get filled. Right there, that was just an absolutely beautiful short side scalp that should have set us up probably for the third or fourth time today. Didn't develop. Absolutely didn't develop. And one of the things that really bothers me about essentially day trading and short-term trading and scalping is that you don't always get filled. That right there was money in the bank. You can already see the play. We were there at 428. Now it's down to 425, and we just did not get in. Didn't get in. Pure and simple. Welcome to trading, guys. Welcome to trading. Is there any reason to leave our sell signal up there? No, not right now. That was an absolutely beautiful level. Didn't get filled, and that's life. So maybe if you want to account and be a little more aggressive and sort of account for that spread, you can do it. You just got to be sure that you're doing it in the right fashion, and you got to shade your entry just a little bit to the short side, or if you're on a buy side, excuse me, you got to shade your entry to the long side. That was a great trade. That was right there for $3 or $4 right off the bat. Would have been a great Monday trade, but we didn't get it, and that's life. That's life in the fast lane, right? So I do want to welcome everybody to week 34, the week ahead. I definitely want to get up and running here. Looks like we're having trouble getting connected on YouTube. It does not really surprise me. We've had all sorts of Cloudflare issues today, but if you are seeing this, welcome to the room. This is week 34. Today we're going to cover gold, the NQ, and WTI. We just had a banger on gold for $3. Didn't quite develop for us, so definitely disappointed there to start off the trading week. And it does look like our Restream IO is having problems connecting. So you can see us live on X right now. You can see us live on Facebook as well. You can also see us live on one of our YouTube channels. But if you're not seeing us, picking us up, you can also see us at the How to Trade Trading Room. So that's about all I can say about that. Unfortunate that we just didn't get our trade, but that's okay. All right, the week ahead for NQ, WTI. Definitely want to start off with another trade idea. This one's facing the dollar-yen. Really a nice trade that we have developing here. About that 160 zone, somewhere right around 160.61. You can see that we've got an opportunity potentially to sell this thing right up there from where we need to be. I do believe that we're going to get this trade this week. You can see this is a daily chart for the U.S. dollar, Japanese yen. If we do break high up above 160, we're going to have a fantastic opportunity to scalp this for probably 40 cents to the downside, somewhere in there. So I definitely want to point this trade out to be really a banger for us, probably middle of the week. We'll get into our economic calendar for later on, what's going to develop, but you can definitely see that we've got an opportunity here potentially to get involved from this level right up here, 160, probably 160.49. I think that would be a great opportunity for us potentially to get in on a little bit of a short trade. I love the short action, that's for sure. Let me see Isaiah. Good to see Isaiah. Welcome. Happy to be here once again. What's up? With Iran news messing up gold. Well, we just had a banger of a gold trade. Just beautiful. Didn't get the fill, but I mean, our long-term level, be very, very cognizant about what's happening here in gold. I mean, absolutely want to be careful that you don't get too overextended to the short side. We were looking for that big bearish break earlier this month. Did not happen. Now we are just having a hell of a fight right there at 44.25. That 44.28 at level, that's a long-term Fibonacci level. And we're having a great fight there. We're looking potentially to be, I would definitely say, not necessarily confident about this zone, but I know it's a great scalping zone. We just scalped it a couple of times, but here's the problem right here. I would love to be able to tell you, Isaiah, right now to dig in and short gold and feel good about it. You can't do it right now. We've got a fading U.S. dollar. Excuse me. We have new headlines coming across the news wires from Trump just a minute ago saying that he's going to bomb Oman potentially. That's just messing things up. But definitely what we see with these long-term levels is once they've been tested a few times, this is a 1-minute chart. Beautiful trade back there about an hour ago, hour and a half ago. And then right in here, this is the type of beautiful stuff we love to see. Really tight, beautiful, tight scalps, high probability scalps. The problem that you run into from that 44.28 level is once we break above that zone, we are gone. And I mean, this market's not just gone, it is gone. So I would definitely be cognizant of what I was doing from that zone. Still, I mean, intraday, I would be bearish right now. But I have to tell you, I wouldn't be holding shorts. I think the scalp, that money's right there. But if you do break high up above 44.28, something like that, then we can start talking about buying the market and feeling pretty good about it. Right now, I wouldn't buy. I wouldn't sell. If you wanted to sell, that's probably the only trade that I would even accept as being a viable answer. If you wanted to sell, you could sell from here and put your stop loss up here, up above maybe 44.30 and look for a retracement, maybe a falling market down to 44.20. But in my view, this market's loading up. We're moving higher. And as soon as 44.28 is out of the way, this thing's going to break high. So be aware there. As far as our trading plan goes for the rest of the week, 62% right there at 160.61. U.S. dollar, Japanese yen, we're looking to sell 160.49s. That would be one that I would write down in my book. I wouldn't be too anxious to dive into that dollar-yen market just yet. It is flat. I would call it a dead fish, flat as a pancake, really, going back to about the 10th of August. Very, very flat price action for the last five days or so. So I wouldn't get too carried away with wanting to make a play and the dollar-yen just to force a play. I wouldn't do that. But what I would do is I would seriously consider playing that later in the week. I think it's going to be pretty good. Let me see. Isaiah, wow, I'm shorts currently anyways. Well, I mean, if you're holding shorts in gold, go for it. Go for it. Do what you got to do. I'm just telling you, that's a break point. And once we break above that and get established, we're not just going a little bit higher, we're going a lot higher. So that looks to me like it's the lid on the market for this early intraday session. So I definitely wanted to cover that before we move much further. Week 34, 2026. This is what it's going to look like for this week. U.S. Treasury auctions today. That's typically a nothing burger. Tuku, good to see you out there in the How to Trade community. Monday's typically a nothing burger. There just isn't much going on. Most Mondays, we're recapping the weekend. We're talking a little bit about what could happen potentially coming up in the future. I like to game plan on Mondays. Here's our calendar for this week, and these are some of the things that may roil the markets, and they may not. Very slow news week, no question about it. Very, very, very slow. U.S. Treasury auctions on Monday. That is a nothing burger. I wouldn't worry too much about that moving the market, but it does give us an idea of where monetary policy may be headed from the Fed. I'll break that down for you in just a second. Tuesday, housing starts and home sales. A little bit more important, but still not huge. Not a big market mover. People aren't going to sit around and go, oh, we went 1,000 points down in the Dow, because the housing starts. You're not going to see that. And then Wednesday, UK CPI, FOMC minutes. That's probably going to be our biggest day this week. FOMC minutes. We're going to go ahead. We'll have that for you on Wednesday, so be sure to tune in, and we'll be back to our same time then. Probably going to trade for a few hours that day. FOMC minutes is an interesting day to trade. I don't really like doing it, but a lot of you really like watching. So we'll go ahead and we'll pull it up and see if we can make a little bit of money there. Thursday, the Philly Fed and jobless claims. That's going to be an interesting day. Philadelphia Fed used to be a big deal. Used to be a really big deal. Not so much anymore, but we are very interested. And also jobless claims, weekly jobless claims numbers. After the brutal NFP that came across the board last July, we can definitely look for a little bit of action there on our jobless claims. No donation Friday. That means there's just nothing much going on. No donation Friday. I wouldn't worry too much about this Friday. We're going to get in. We're going to trade it. I'll get you prepped for the weekend. But big picture, probably not going to see a whole lot of action on Friday. Full disclosure here before we dive into the Euro USD. Let me see KO. Good to see you, KO. Welcome. Can you please check the Euro USD? I would absolutely love to. This will be the last week for me in this studio. We're going to be making a landscaping change. We're going to be changing up the studio look. I'm heading out to a different venue. We're getting a different office set up. Maybe some of the fruits of my trading labors are starting to pay off, or they have paid off. I never like to get in and talk money because this environment, these live streams, there's so many idiots out there talking about, I drove my Porsche to work again. Or no, I drove my 5th Porsche to work. I don't play that game. Bottom line is we're retail traders. I'm a blue-collar trader, but I can put you in decent positions mentally to approach this game to be around as long as I've been around. And I can tell you right now that when we get the pie-in-the-sky ideas and we're thinking about Ferraris and private jets and boats and all that stuff, you're going to lose. Unless you go in there with some money and a gambling attitude, you're going to lose. What we like to do here is we like to bring the hard hat in the lunch bucket, and we like to work hard. We like to do what we can do to put ourselves in a position to succeed. Now, I know that's a cliche. Well, I just want to do the best I can. Well, we all want to do the best we can. Who really cares about your best? No one cares about your best. What this game is about is getting results over time. And that's what this channel can do. This How to Trade channel, I've been here 5 years, talked to some traders that haven't had it so good. Talked to other traders that thought that they were a lot better trader and knew a lot more than what we bring to the table. But I've also talked to a lot of traders that were in the middle and that were struggling and that are better now since they started taking a look at the markets maybe through a little bit different lens. And to me, that's really what it's all about. I'm trying to pass along some information from my beats, but I'm not going to sit here and BS you. I'm not going to tell you, we're going to a palatial estate for the next office. No, we're not. I'm actually going to take a much different approach to these live streams moving forward. I think that we may be missing a trick in some ways. The live trading is what people seem to love, and that's what I do best. So we're going to start doing some live trading, and that probably is going to be a much simpler approach, a different layout, completely different. So I'm looking forward to it. However, we still will do some of these conventional live streams. I love the week ahead. It's a great opportunity to get everybody set and ready with a few levels and a few trade ideas to watch and the proper mentality moving forward. So no Ferraris here. No private jets here, that's for sure. All right, let's go ahead and cover the Euro USD. I want to make sure that we get some of your questions answered, as many as I can. I mean, that's really what I'm here for. This is an interactive trading experience. You can see that I really haven't been looking at the Euro USD very much at all. Why? Because it hasn't done much. Now it is. Now we're starting to see it open up to the top side, which is fantastic. Now you may be looking at this chart going, what are you doing? Multi-time frame analysis, top down. I typically, especially with Forex pairs, monthly, weekly, dailies, and then we can start talking about 4 hours and 30s. I don't like to go any tighter than 30 unless we're scalping. And that's something we'll probably do later this week with the FOMC minutes. Right there, though, you can see our key line in the sand. It's the bottom of our monthly bull flag. There's your bull flag. There's your run. There's your rotate. 38%, 113.55. That is the support level in this market. If we test it again like we did last month, I can't say that. The regulators often tune in and watch, and I get in trouble for saying do this, do that. I would strongly consider going long from 113.55 there. That's the politically correct answer. As far as what do we have right now? Well, I mean, we had a beautiful trade right in there. No question about it. That was back on the 20th of July. That was a banger, absolute banger. If that's a high leverage play, you could have made your quarter with a trade like that. And a lot of folks, that's how they trade Forex. Now, if we want to get sort of in the taller grass here, what can we really say about this daily formation? Run, rotate, break. Run, rotate, break, right? Well, that's fantastic stuff. Well, let's take a look at what we can do right now to trade. Spike low there, spike high. Are we in the kill zone? Aren't we in the kill zone? 38% would be one that I would consider as potentially an intraday trade going into the Tuesday session. 115.75, 115.76. I would probably go with 76s just because I like shading above quarter handles. I know we're moving fast today, but that's okay. It's the cold medicine kicking in, the antihistamine blockers, right? No, we'll talk a little bit about that at the end, the psychology of trading when you're not 100%. I don't mind it because I've been here 15 years, but if you're new, we'll talk a little bit about the mindset. 115.76, though, really nice daily pullback. I would be buying pullbacks right now. The U.S. dollar is on its heels. The reason why it's on its heels is because of your CPI data. You had a horrible NFP report for July. Terrible, absolutely terrible. And then you had really positive CPI, PPI figures. So inflation's down. Jobs are down. Is it prudent for the Fed to raise interest rates? Right now, CME Fed Watch says no, they're not going to raise rates in September, maybe October, maybe December, maybe not at all. So what has that done to your U.S. dollar? It's hurt it. Right now, dollar index is trading about 99.49. It's been in a downtrend on the short time frames really since that August 13th CPI print. So what can we make of this? What should we do? Well, I mean, there's a lot of things we can do. Do we want to bet on the dollar and make a big surge? I don't know. It feels like something's going on in the Middle East. It feels like Trump's looking to get out of there potentially or wind down operations before the election in the fall. I think that's one of those deals that definitely definitely could be a market driver for the Euro USD. Definitely a bullish one. Now, if the war kicks off and the U.S. goes in and commits and really ramps things up, that's going to lead to a stronger dollar. It has all year long. The war in Iran in the Middle East has led to a stronger dollar, no question about it. So if I'm playing the Euro USD, I know I've got sort of a dovish Fed on my hands. If things start winding down here a little bit in the Middle East, or maybe just take a pause for 6 months, you're probably bullish this pair. You're probably bullish. So it's a good question, KO. You're looking to bid. I'm looking to bid 115.75 is probably on a daily pullback. We're right there. What's that, about another 76? So I need about another 12 pips. Let's go down to a 4-hour chart and take a look at exactly what's happened today. Something like this. So if you're looking at potentially, let's go right from this spike low down here. So we got a spike low, spike high, same basic level. 4-hour symmetry is beautiful. Spike low there, compression, compression, break, compression, break. That's almost a rally-based rally type of a formation. We're going to be doing that workshop. A little bit later this week on Thursday. I'm going to show you the rally-based rally, but that right there is a pretty good one. You've got 38% Fibonacci retracement involved as well. I do believe that you have an opportunity there potentially to bid 115.76 is not bad. Not a bad play for the Euro USD. Tentatively bullish, even though the last 8 hours have sort of been a little bit bearish. There have been some sellers in the market. The asks, I would say, are winning over the last 8 hours or so, but I wouldn't get too carried away with that. Still bullish here. A more conservative entry point is going to be 115.50, something like that. Good stuff, though. I really like the Euro USD. Good pull right there, KO. Thank you. Let me see. Tuku, CHFJPY. Absolutely. Not one that I typically trade. However, I mean, do we really need a reason, or if you're going to trade Forex, do you need a reason to ignore the yen? Most people are trading yen. You're trading yen pairs almost daily, and that's fantastic. Spike low there, spike high. Pullback zone right there at 196.55. Somewhere in that zone, 196.57. Pretty good stuff. I would be looking to grab that bid right from that zone, right from that area. I think you have a pretty good opportunity there maybe to get something cooking. So 196.57, something like that, could be very good for a pullback buy. As far as my macro, we'll take a look at the big picture. That would be more of a scalp. This would be more of a scalp. You're looking at probably 10 pips, and you can get a 3.5 pip spread. It's just not really enough to get in there. So maybe you can get a rally up here for 20 pips, 25 pips. I mean, the spike high here is 197, so we sort of saw sellers dominate this market from 197, 196.50 down there, somewhere in that zone. So that's where I would be looking to buy it. Personally, let's take a look at the macros. These can always be tough. A lot of these pairs, especially the Swissy pairs. Now, this is a good one. I mean, the volatility is there. At least it has been over the past several years. And I know all the intraday traders just rolled their eyes and said, "You're looking at a monthly chart." I go, "Yeah, I got to be sure of something. I got to check something out. I got to make sure that we're not butting up against a huge level like we are right now in the gold market." Spike low, spike high, rotation, essentially a bull flag. Essentially, that's what it is. Come down a little bit more. The buy of all buys is 189.50. Okay, we're nowhere near that, but where are we? We are right on that monthly moving average. Downside, that 13-period EMA, that's my bread and butter, 194.32, 194.32. 13-month EMA, that's big. So I got 194.32. We're at 196, somewhere in this zone. So we bounced off of that. We're looking to move higher. Let's go to a weekly. So there's your weekly. Spike high, spike low, working that. Probably looking towards a 198.19 sell. That's a pretty good sell there, Tuku. As far as I'm concerned right now, though, that pullback bid on the 4-hour chart, that's not a bad one that we started with. So I don't really see any huge topside resistance until 197.13, and that's a 50% level. I don't really care much about those, but 198.19-ish, that could be an area where potentially we could sell this market, Swiss yen. So I hope that helps there, Tuku. Absolutely. You guys have any other questions, be sure to throw them out there. All right, let's do a little bit of live action trading here, and then we're going to talk a little bit about psychology. I want to cover NQ 30-minute chart market profile. We use a lot of market profile here. It's been really popular. It's been good for us. I would say that we haven't had much problem turning weekly profits, trading TPO charts. This is sort of what I do. I do it typically a little bit later in the day than this, but this is still just a great opportunity to trade rotational markets. And we switched over to the TPO charts, the market profile approach over the summer. And we didn't just pick this up out of the blue, something I've been doing. This is one of the first things I learned when I got involved in the markets, 2011, was market profile. I had to study the works of Stottlemyre that developed this strategy or this approach for commodities trading on the Chicago Merc back in the day. Well, that was one of my first assignments was, Shane, you need to learn Stottlemyre. And so I said, okay, I learned Stottlemyre. Well, this isn't exactly Stottlemyre's work. This is just a TPO, time price offering chart based on just from your trading view, right? But your TPO chart is very important, and it's very, very, I would say, good at telling us where the volumes are for the day. Now, the reason why I don't do TPO charts on Forex is because it's an OTC market. We don't really know what the volumes are. That's all self-reporting. That can be problematic with the brokers, the liquidity liquidity providers, and also the market makers. That's problematic knowing exactly how much volume is at a specific price point. However, in the futures markets, very good way to trade. Very good way to trade because you know exactly how much business is being done at each price point. And that's what makes this type of trading very, very potent, especially when you're looking at rotational markets. So point of control is right there. That point of control, remember, that is the level at which most business has been done. If you're confused by this TPO right here, just think of it as volume on its side. That's it. Volume on its side. My bread and butter is the 30-minute duration. I like that. I like that U.S. session split into 30-minute segments, especially when we're trading TPO. However, what I like to do is I like to go 1-minute charts, typically to manage these trades. I like to get in. I like to get out, especially futures, especially something that is as touchy and as dicey as the NQ. So E-mini NASDAQ futures. Let's go ahead and take a look and see exactly what we got cooking. We got a point of control that's a little bit above us here. Still a little messy. I would say that the jury is still not in where the volume is, but we know it's a flat day. We know it's a flat day. So, excuse me. Is this a good time to step up and sell the point of control? Maybe. It's not the answer anybody wants. I would say, yeah. On this NQ, I would be looking to sell right up there. If we could get a pullback right now, right up there, 30, 32, 34, somewhere in there. The distribution is relatively solid in this zone. The majority of price action is taking place right in here. And you see our value area high is right up there at about 30,284-ish. Value area lows right here. Do we want to take a value area low buy? I don't have any problem doing either. I could sell the point of control right now or buy the bottom of value. I think it'd be just fine of doing either. So let's go ahead and get ourselves an order in the queue. Let's go to a buy limit. We're going to go ahead and rock one lot here to start the trading week. And I'm going to tell you why. I like to be very conservative when I start trading on a Monday. I do not like to lose the ranch. And I damn sure won't do it on a Monday. So here you go. We're coming off down to lower part of volume. Excuse me. We're all over the place here today. Lower part of value. Essentially, this zone right in here is where the majority of business is taking place. And within this zone, this price point, I mean, it's just an according to Hoyle rotational day. It really is. Just right in the guts of this market structure. 30,184, that's a pretty good zone. We're looking at bottom of value, somewhere right in that area. We'll go ahead and look to buy 84 and quarters here on the NASDAQ and see if we get an opportunity to do it. We're only going to be rocking about one lot here, though. So my take profit, we're going to want to take probably $100 off this one, $125. Get the trading week started off right. After we were neglected a beautiful fill right there on our gold chart. I mean, this gold, look at this gold trading. I mean, this stuff right in here, that was the trade. I mean, that level's a big deal. If you're still watching Isaiah and you're looking and you're holding shorts, be careful here. This market is loading up in a big, big way right around that 28 zone. So unless you're taking a big position, a potentially large position here, and looking to make maybe a swing trade or a week trade or maybe an intermediate term investment to the short, be very careful with what you're doing. Be very careful. That's a potential break zone, and you can see it developing, in real time right in front of you. All right, let's talk a little bit about Mondays. Excuse me. I do apologize for the time change, but today we were going to have to do something different, or else I probably wasn't going to make kickoff. So we're here. We've got a few things that we need to cover before I leave. We're going to do some live trading, though, and that NASDAQ trade is coming our way. So that one's going to be a lot of fun. I think we've got a great chance to hit that one. All right, Monday psychology. Here's the thing about Monday psychology. It's always best to start the week on the right foot. You want to be bullish, of course. You want to make money, of course. Everybody does. That's why we're all here. We're all sitting here to make money. But there's a way that you need to be thinking of the markets if you're serious about being in the markets for any given period of time. So right here, Monday Psychology, this is sort of my game plan and what I like to do for each and every week. Primary objective is to trade into the positive, and what that means is I'm not taking any big risks on a Monday. I'm not going to go into a hole and take a big drawdown. That's just not what we're going to do here. We're looking for profits. We want to trade to the green. Think about 3 yards in a cloud of dust. If you're a football fan, we're trying to get a positive first down play. I don't want to lose yards. I want to gain a few yards, and I want to put myself in a position to where we're going to be able to move the ball down the field. We want to make money. That is the whole reason anybody's here. I want to trade to the green. What does that mean? Let's get it going. Let's generate some momentum. On Fridays, we preserve momentum. On Mondays, we get it started, right? So how do we do that? Well, maybe we take smaller profits. Maybe we trade with reduced leverage and make sure that our losses aren't going to be huge. The worst thing you can do as a trader, well, I mean, there's a lot of them, but probably the 3 cardinal sins. The 3 cardinal sins, number 1 is chasing losses, number 2 is adding to losing positions, and number 3 is just over-leveraging from the beginning. Those are probably actually, I would say that there's a lot more than that. Fighting trends is a bad one too. But probably a close number 4 is not taking care of your mentality, your mindset. I mean, if you're not in there to win this thing over the long haul, you're going to have a real problem. And the best way that you need to look at this is, how do I stay mentally healthy for not just the days and the weeks and the months ahead, but how about the years? And the answer is take the path of least resistance. I tell you this because I've been there. I've taken the big losses on Mondays. I've taken them. They're huge. I've gone down $2-3 on a Monday. And a lot of people in YouTube land are going to roll their eyes and go, so what? The other guy trades $2 or $3 every time he sits down on every trade. And I go, good for him. I'm telling you, from a retail trader standpoint, there's very few of you out there that are trading that kind of size. You need to make sure that on a Monday you don't go into a deep hole. Number 1. The reason why is because Tuesday, Wednesday, Thursday is when our premium trades typically present themselves. You're going to be trading back to even Tuesday, Wednesday, Thursday. And by the time Friday rolls around, you may be at scratch and you'll be exhausted. You fought hard and you got all your money back, but you lost it all on Monday and you didn't make any. So you got to start thinking about making money. This is the way to do it. Keep your head straight, number 1. Monday Psychology, we've got to get momentum going. We're looking to take maybe smaller profits and get on the board and trade to the green. Begin trading with someone else's money as fast as you can. That's what it's all about. You got to put some money in the market. You got to risk a little bit to get in. I get it. All right, that's great. But with that money, make a little bit of money and start trading with the market's money. It's that simple. Trade with someone else's money. That's all there is to it. Get going on that. Do that as soon as you possibly can. You have a chance to succeed over the long haul today. So let's flip on over back to our trade. So that's exactly why we're going to execute this one the way that we are. We're not really looking to move for the earth to shake or any of that stuff. $125, one lot in the NASDAQ. No matter how bad it gets, and we're not going to let it get very bad, we're still not taking an epic loss here. So good way to start the week. We want to trade to green. All right, let me see. Isaiah, still holding my sells. Had to close my gold sell on a $3 profit. Thank you, Sean. Well, it's Shane, but that's okay, Isaiah. I don't worry about names. I really don't. But absolutely great. Great job. Took a nice short there. This is the trade. This right here is the trade. No question about it. There's the line in the sand. If this thing breaks above 28, look out. Be very, 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 very careful. You don't want to be holding shorts if this thing loads up and moves a little bit higher. Be careful. Preserve your capital. Capital is a wonderful thing. Not having it is not a wonderful thing. It sucks. All right, Monday Psychology. So that's sort of our psychology lesson for today. News of the day. I'm going to spend like no time on this because it doesn't really show us much of anything. 3 and 6 month T-bills. We saw some news come out of the bond markets earlier today that show that the United States government is buying more T-bonds, more T-bills. They're buying more treasuries than they did since COVID, more than any period since the COVID breakout, the COVID pandemic. So this right here is a very serious thing. And the reason why it's a serious thing is the United States is revving up to do something. They're getting ready for a crisis, no question about it. The bond purchases, the Fed's printing the money as fast, or the Treasury, excuse me, let me rephrase. The Treasury is printing money as fast as it possibly can based on credit given to it by the Fed. And then what do you got here? You're getting bond purchases. Basically, the printing presses are running. What does that mean for yields? Well, yields are down a little bit, not really significantly though. You take a look at that 3-month T-bill yield, 3.715. That's down a little bit week over week from 3.735. Suggests maybe a little bit more of a slack in the market. You know, those yields typically when they rise, that means the government's really trying to generate some activity there. And now that they're falling, you can see that money is definitely being injected into the system. The real question is, what does all this mean for our markets? It's a good question, and it's a hard question. Right now, nobody really knows. We're all sitting sort of on our hands. Everything I read on X says bubble, bubble, bubble. It's going to break. It's going to break. Well, that gets headlines. That's what a lot of people want to hear. They want to hear the end of the world is near. It's not necessarily the case. These markets are very near all-time highs. They're churning higher seemingly every day. Gold got a bit of a bump because the U.S. dollar's coming off just a hair. Why would the U.S. dollar be coming off a bit? CPI, PPI, yeah. Maybe you're not going to get that interest rate hike, yeah? Or how about those printing presses injecting capital into the entire system? That's a factor too. I can't wait to trade this stuff. I really can't wait to trade it. I mean, it's going to be so much fun over the next year, 18 months. I mean, fortunes will be made in the next 18 months. I guarantee it. It's going to be fantastic because even if the markets don't do much of anything, everybody's playing. And right now, everybody's playing, and the powers that be are involved. The central bankers are involved. Global economics is at a breaking point. It is. The debt loads, there's no arguing with the debt loads. You've also got global conflicts that are sort of seeking a level, but could kick off at any time or could be rectified. It all leads to volatility, and that's all we need to trade, guys. If it bleeds, we can kill it. If it has a pulse, we can trade it. It's that simple. All right, let's go ahead and get back on over to this NASDAQ trade. I mean, this is like watching paint dry, watching these things set up. You can see right here, we're still sitting right down there at the bottom of our value area. Very confident about this play. It's just a question of whether we get it or not. At this juncture, I would also like to trade to the short side as well. So let's go ahead and put an order down. Let's go a sell limit. This one's going to be a little bit dicier because we might get a moving point of control. I could see that scenario developing as well. Let's go ahead and sell this thing. Sell limit order right up there at our POC, our point of control. Take profit. It's going to be the same basic type of a strategy. We'll be looking for like something like a 150. Let's go ahead and put that down there, maybe 170, 150, somewhere like that. And if we get an opportunity to sell that POC, we'll be in great shape. If we get a chance to buy the bottom of value, we'll be in great shape. This is a really, really, really good rotational trading day. Really good. So I'm absolutely sort of over the moon about the way that this week started. It's good to see Isaiah's on the board with a $3 win there on gold. We didn't get filled in real time. I wanted that one going on the tally. I wanted that trade going on the ticker to start up the week. That would have been a pretty good one for 500 or so. But that's all right. That's all right. We don't worry about it. The next trade is always right around the corner. The best opportunity is always right around the corner. Your best trading day is always tomorrow. The best week's always next week. And what we're going into, politics, global geopolitics, politics here in the United States. We've got Anthropic, we've got OpenAI, a big tech getting ready to have some of the biggest IPOs in history, SpaceX on the rebound. There's so much going on here in the markets that, I mean, it is truly a trader's dream. And we're only in August. Wait till these markets start trending a little bit later this year. After Labor Day. I mean, this is the dog days of August. That's why we're trading TPO charts. We'll get back to Fibonacci trend plays and things, but we don't need to do that right now. So we're going to go ahead and see if this thing comes our way. We're sitting right down there at about 130.85, somewhere in that zone. We are getting there, and we are getting there quickly. So I think we're going to be dancing here relatively soon. Let's go ahead and wait and see how this pans out. I really like this opportunity here. The real question is if we get filled or not. For me, what I like to do on these is just take it right down to a 1-minute chart, and let's go ahead and see if we can get some execution. Those are our lines in the sand. That's how we're going to execute. Let's give it another minute. I know a lot of you, especially in the trading community out there, the YouTube trading community, and all these different venues. I watch traders that basically, when they come on a live stream, they'll pick a long or a short, and they'll just watch it tick one way or the other and manage and talk as the positions open. I'm not a big position trader. I'm more of a scalper. We do take positions. Excuse me. We do take positions, but it's not always what I would say the best thing to do. Everybody's in a hurry to commit. Are you long or are you short? Are you bullish? Are you bearish? Because everybody essentially wants to be right. Traders, it's one of the biggest challenges you're going to have as a trader is that temptation to want to be right. I want to be right. I want to be right. Let's shoot for a little bit more money down here, though. Let's shoot for about $150. One contract. We're not going to let this one get away. Probably only going to be in the market about a minute or two, maybe. But it is coming our way right now. You can see we're ticking down a little bit. Right there would be our entry, somewhere right in that zone. Should get there here relatively shortly. We're going to tick on over to WTI crude oil here in just a second, and then maybe some gold futures. Some December gold futures. December gold, my favorite contract out there, absolutely. All right, let's look at WTI. I'll keep a sort of a close eye on that one. NASDAQ, what's our happy zone? Right around 184. All right, WTI, really an interesting type of a market here. We had some news. I don't know what's wrong with that TPO, though. Oh, I got it. Wrong chart. Okay, let's go ahead and do this one. Excuse me. Crude oil, my bread and butter. I'm a specialist, you could say. Everybody wants a title these days. Everybody wants everything. I don't really care about titles. I care about money. As far as what do we have right here, we've got a very, very dead market. We've got a tight market, a dead market. We had a news release here, I don't know, about an hour ago or so, and you saw Trump. Trump threatens to bomb Oman if it gets in the way of ending the Iran war. Trump threatens Oman as U.S.-Iran agreement expires. Today was the end of the MOU. The MOU, the Memorandum of Understanding, it's been over for a long time. So right here, we're sort of looking and saying, okay, what does all that news mean to WTI? Well, it broke right in here, so we got a couple of green candles. Other than that, we're just sort of settled in that rotation. So if I'm looking to trade 30-minute chart, WTI crude oil here, you're going to be in a situation where we could have just sold probably the top of value. I'm not interested. Not even remotely interested. Now, the reason why is because you've got the top of value, you've got a real tight market, but that market driver threatening to bomb Oman, the United States potentially opening up on another country in the region aside from Yemen, potentially Yemen or Iran, that's big news. That means that you're putting the region on notice, and all of a sudden it's escalating into something much different than just kinetic strikes against Iranian installations and things. So if I'm thinking WTI crude oil, I probably want to make my mistakes to the long side. So what that means for me right now would be buying the point of control. Absolutely. You can see we just broke through the point of control. Wasn't really interested in selling it. We're interested in buying it now. So what is it? It's right there at about 82.66, somewhere in that zone, 82.67. So let's take it right there, something like that. Let's go ahead and put that buy limit order down. 3 units is a little bit much for me on a Monday. Let's go ahead and put 2 units down on that buy. Okay, so right here, essentially our line in the sand is that POC, U.S. session point of control now. Not the overall. We're looking for the white line. We're looking U.S. session point of control. That's what this volume distribution is right here. Right there, you're looking at potentially, 82.65. We're right in that hot zone. We don't have much room to the top side of value. Top side of value right there is about 82.80. So when we buy this at 82.66, very tight market, we're probably only going to be looking for something like that. Maybe like a 72. Maybe like a 71, somewhere in that, $100, maybe 5 ticks. I know it sounds very, very conservative. Okay, right now we are officially long. Okay, so we just got hit right there. We're coming down to 65, down to 64, rotating around, seeing a little bit of support right here. Let's see how this point of control fares. We're getting a little bit of a bump right there. Extremely slow market. First observation, extremely slow. Not really much happening. Not really much happening. We pivoted off of the top side of market. Now the market's starting to come against us just a little bit. We're not overly concerned just yet. Nice little move. Now we can take this down to a 1-minute chart. The problem is we're likely to get faked out. I'll show it to you at the end of the trade. These are very, very tight 1-minute bars and sort of indicative of where this market is. It's very flat right now. It's flat. It's quiet. You can see our volumes that are showing up. Three on one side, 3 on the other side. I mean, that is fairly thin volume. However, we're not really getting a big rush like we see in the gold market. There isn't just a ton of players right now in WTI, but still not a horrible trade. Not a horrible trade. We're right there at about 67 now. What are we? Break even. Okay, now we got a little bit of a kick. Now we're up $40, something like that. It really isn't even worth the risk just yet. 2 ticks. We've gained 2 ticks. We want to see this one kick back up to about 70 or 71. And right there, we should have just got out of the market. So that was our hit. That's a nice hit for about $100 to begin. No pain, no real pain at all to speak of. The volumes, though, I'm not impressed. I'm not impressed at all by the volumes. You have to be very careful when you're trading this type of strategy because you can see the volumes, a big sweep like that, you've got about 323 in 1 minute. And then what did you drop right off to 83.75? And then we got a kick of 70, and now the market's sort of headed higher. So very nice trade. I mean, we're up about $100 there, but is it great? No, I wouldn't really say it's great. Let's go back on over to our NASDAQ trade. It just doesn't look like we're going to get it. Bottom side of value right there. You've got a buy limit order down at 30. It looks like we compressed. Where did we compress at? Where's this swing low right here? Swing low is right around 31.92. I mean, it's garbage. Essentially, it's garbage. That's for sure. Joshua, good to see you, Joshua. Welcome. Isaiah O'Shane, my bad. No worries about it. Isaiah, I don't worry about names. What's in a name? O'Shane, so please, what's your idea of good capital preservation on lot size usage? I've always said this for a long time, and yeah, it looks like we missed our trade on the NASDAQ. Maybe not. We'll let it twist. As I say, we'll let it twist, let it bleed a little bit. But that's like watching paint dry. All right. Great question, Isaiah. What's my idea of good capital preservation and lot size usages? I always say this. Per trade risk needs to be between 1% and 3% of your aggregate capital. Now, I'll look the other way on 5%. But the problem with that type of strategy is that, yeah, it will keep you safe, but you may not exactly make much of anything. I say that because it's the truth. If you're in there with a $5,000 retail account and you're a little guy and you're looking potentially at trading 3% of your $5,000, the max allocation, 5,000 times 3, $150 on a trade. You sort of see how everything fits together with that. So you're going to hear, okay, 1% to 3% safe, betting a $150 a trade. That's where these big 5X and 10X strategies really, that's why they're so popular. It's because, okay, I can bet 150 to win 1,000, right? And I've only got to hit 3 or 4 of those a month, and then I've made my living. The problem with 1% to 3% for a retail player, and it looks like our NASDAQ trade's coming our way. The problem with it is that you don't make enough money really to make a living doing this unless you have a lot of money. That's how hedge managers trade. They do. They have that benefit. They have the cash. This is going to be a fun trade right here. Let's see what happens. We're right down to a 1-minute chart. I reserve the right to exit this trade early just because we're already up $100, and I would love to get another 150 on the board. That'd be a great Monday. But if this thing runs in our favor, say like 75 or 100 immediately, I may move the stop loss to break even. I don't know yet. We're going to wait and see. It's called dynamic trade management, money management. And it sort of speaks to your question, Isaiah. How much is enough? Well, if you've got 100,000 or 200,000 to trade with, which, I mean, really isn't a staggering amount of money, or if you've got a big prop account, then I highly recommend the 1% to 3% rule. Think about that. If you're betting flat 3,000s on a given trade and you've got 100,000 in your account, yeah, rock and roll. You can make a living doing that. But if you have 5,000 or 2,500, you're probably not going to be able to do it. It's not enough money. I mean, you guys know how much things cost right now. Things are expensive. I mean, expensive. I went and bought some paint for the house the other day, and I just got about enough for just a few rooms of $700. So, I mean, this is what we're talking about in this world. So if we're talking about making the big money, we have to figure out a way to get there. And there's a couple ways to do it. You can take the long shot gambles, and you can throw your 5,000 down and say, okay, I'm going 5,000 on long Tesla options by the end of the week. And if we hit this thing, we can walk away, with 50 or 100,000. You can do it that way. I don't have a problem with it. I really don't. Problem is, on my vacation, I was in the casino and I lost 20 hands of roulette in a row. Of course, I was picking numbers, but that's the same thing. I was looking for big payoffs, 36 to 1 or whatever. Lost 20 in a row. And here's the deal. That's not uncommon. So if you're going to try to hit the home runs, are you willing to lose 20 in a row? And you say, oh, it's a lot different in the markets. I go, yeah, we just swung it in our favor a minute ago. That crude oil trade was a high probability trade. Now, the roulette table's not, of course. But if on that crude oil trade, I'm sitting there buying 66s thinking, okay, we're going to trade up to 89s now. About 82 66s, and I'm thinking we're going to get $87. That's essentially the same thing. You're trying to parlay a little bit into a huge fortune by playing roulette. It doesn't work. Eventually, you run into a losing streak where you lose a bunch. You lose a bunch of trades in a row. Then that's okay. That's just the way that works. Now, All right, here we're going to be dancing here in a second. Extremely volatile market than the NQ futures. Buying the bottom of value here. Let's see what we've got. Let's see if we get filled up. Hit us perfect and didn't fill us. This is becoming a damn, look at that. Okay, now we're long, probably on the wrong side of the break. Let's go ahead and let this thing twist for a minute. I'm not going to get too wrapped up in this trade. I'm not emotionally attached at all. It just broke even. Now we're kicking a little bit higher. Okay, bottom of value looks pretty good, but still you're in a downtrend on the 1 minute chart. I mean, is there any real reason for us to stay in this? We're only up $20, $15, $10. We're fighting the trend. What we're going to do right here is we're going to protect this trade. We're going to protect it. If it spins higher, then we're done for the day, essentially up $250. And if it spins lower and takes us out, we'll walk away up, $30 or 15 at scratch. That's perfect for me on a Monday. I have no problem with that on a Monday. See how thin the market is? The bid-ask is all over the place for a futures. It looks to me like we may get a little bit of love to the top side here, but I hate the way this is panning out. Absolutely hate it. Don't like it at all. More than likely, we'll get stopped out. Almost guarantee it. Coming down. Stop us out, gobble us out, and then return back up to where we were. Now, we should have already pretty much got a nice bump. Here's a decent kick right here. I mean, it's being fought right in front of us. 33, 32. I mean, we need the next 30 seconds to be kind to us to even have a position, but I don't like the way the spreads are working. You can see that it's getting really tight right around the bottom end of value. It feels like we want to creep a little bit lower, and we're sort of moving in leaps and bounds here. It's not a fluid movement at all. It's extremely choppy. I would just go ahead and scratch that. That's fine with me. If it ends up rebounding and rotating back up into the market, that's fine. But for a Monday, I wouldn't put too much stock in that trade. There's no way that we're going to hold in the face of a potential NASDAQ breakout. So back to the money management discussion. Of course, it's going to break up in our favor, but we can't afford to hold it. The big thing that I would say here with what you want to do money management-wise is be comfortable. If you have 100,000, 1% to 3% rule is plenty for you to make a living. Plenty. If you have 200,000, see, we pulled the plug a little bit early. We could have won that one too, right? Not too worried about it on a Monday. The big thing that I would say, though, is if you're going in there and you're trying to play roulette and you're taking your 5,000 and you're looking to hit these huge home runs, I'm pulling for you, and I want you to win. I'm pulling for you. The problem you run into, though, is a lot of times you lose 20 or 25 in a row trying to do that, and it just turns into a real, real mess. That was a good trade, right? Not really. You're still fighting the downtrend here. Well, you're not really fighting a downtrend. It's just, bounced right off of that, so I played it too tight. Maybe we don't play a 1 minute, right? I don't want any part of holding this long. Not a chance. Not a chance. Bottom of value area typically is an inflection point. That means that the bidders are either going to be there or they're going to take this dog for a walk down there. Bobby Bob, good to see you, Bobby. Welcome. We had to go a little bit earlier today. My apologies for the late notice or confusion. One of those things where got a few other things I got to take care of today and not feeling overly great. So what's happening now? We're testing the bottom of that value, and we're going to trend lower. I would almost guarantee it. Almost guarantee it. So interesting play right there. Let's go to our WTI crude trade. Not bad. Traded up to about 79. One other one that I do want to look at this time of day. It's a little bit earlier than we usually play the gold futures market, but definitely want to take a look at this. All right, gold's already sort of broken. So for late in the day, I mean, you really do have a clear-cut point of control. If you have an opportunity to buy maybe 44.50, something like that, then yeah. And this is August gold futures. Definitely be looking at something like that. Definitely. Value area, we broke out of there right around the U.S. Open, 7:30 a.m. Right there, there's your 8. We sort of trickled higher and higher and higher. Now we're just sort of rotating around. So a couple of ways that we could trade this. It's not, I wouldn't really consider it a huge trend day, but we could definitely respect the top side of this market as the bidders are winning. No question about it. So maybe something like that. If that was your intraday range and this actually developed to the downside the next several hours and this top holds, that area right there, 44.53, pretty good stuff. I would say gold futures, not bad stuff. All right, let's go back to our NASDAQ, and you see the heat is on down there. Let's check one other trade out here. Let's go E-mini S&P 500. Yeah, got to watch that. Below value, starting to trend down just a little bit on an intraday basis. U.S. session has been ugly. Very ugly. What do you want to do now? I want to sell it. I'd love to sell the point of control, the POC right now. You just don't really have an opportunity. A lot of action right there, right around 77.95. A lot of action there. So I would keep a close eye on that zone. But as far as what to do right now, if you have to make a trade right now in the E-mini S&P 500, that's it. Point of control. 77.94, somewhere in that zone. Pretty good trade. Let's go E-mini Dow. E-mini Dow futures. We got a lot of stuff lined out on the E-mini Dow, right? Value area. There's sort of your overnight point of control. You can say the London point of control up there. This area right here is what we're interested in. Do you want to buy it or sell it? I know nobody's going to answer. It's rhetorical, but I ask a lot of questions because I want everybody always thinking, always be thinking, what would I do right now? You don't want to do much of anything with that, realistically. We could do it with crude oil because the news cycle was helping us. The bidders had come into the market since Trump talked. Right now, you're probably going to see maybe the opposite effect on equities, but they're still holding firm. If we wanted to do anything, we could sell that POC right there. Something like that. 53, 6.25. Could be pretty good. Let's try it. Really, really dead, though, in this area. Sell limit 4 units. We're not going to go with 4. It's Monday. We're going with very conservative profit, not profit targets, but very conservative money management. Okay, we don't want that. Yeah, right there is where we want to be. Right on that POC. There's our POC. Nice distribution here. Trading about 53.6. So, yeah, I don't have any problem selling 53.6.25. I think that's a pretty good intraday trade. The real question is, do we get a chance at it? You know, we'd have to get a little rotation down to about 6.11. Not a bad trade. Not a bad trade. We just got to get it. We just have to get it, right? All right, everybody. My throat is about out of here. Unfortunately, I don't know what happened. Maybe I worked too hard over the weekends. Who knows? But definitely feeling it a little bit today. See, there you go. NASDAQ blew it. Maybe we played it too tight, but the market definitely tried that lower end of value and bounced. Number one rule. There's two cardinal rules of trading. I mean, I've been talking a lot of psychology here, but cardinal rules of trading. Number one, never make a winner a loser. And by a winner, I mean one that actually goes in your favor more than a few ticks. It's got to have a decent move behind it. Don't give that money back to the market. It does not need it. Number one. Number two, once you make a decision in a trade, once you either let it run and take a loss, or once you cut it off, or once you take profits, as soon as you exit that market, it is done. It is done. You don't sit there and dwell on it. And what I mean by that, I'm not saying don't go back and study your execution. Go back and study it. I will. I'll take a look at that last NQ trade we took. I mean, let's do it right now and see exactly what happened. Was there any potential reason why I bailed on this trade? Repeatedly banged against the point, the lower value. That right there's the lower value area. You got a sweep. A sweep came in and helped you. You had a guardian angel. Guardian angel came in and helped you, and now the market's ticking down again. It just, to me, was it really worth it on a Monday? Trading one contract, I guess I could have let it twist and see. You look at the 30-minute chart, and it was a pretty gosh darn good entry, right? For a scalp, at least. I mean, that was an easy 150, $200. But was it really worth it? Is staying in that type of trade going to help you over the long run? In my opinion, unless we're trading news events, or unless you know something, or you paid the $100,000 a month for the Trump tweets, the early Trump tweets, it is impossible to predict when you're going to get maybe a bullish sweep or a bearish sweep. It's impossible. Now, we could figure out key numbers, previous days' highs, lows, previous weeks' highs, lows, previous months' highs, lows, and try to anticipate where those volumes are coming in. Once we reach that price point, hell yes, okay, let's do that then. But in that trade that we were just in, we were trading right near the bottom of value. There's no way to know that. Take it from me. There's no way to know that. We were repeatedly testing my lower Bollinger Band and that lower value area. That tells me that a breakout probably is brewing to the downside. Now, the Guardian Angel came in, swept it higher, and everybody that exited the long trade feels bad. I go, well, don't feel bad. We took a $70 loss right there. Right there. You don't feel bad about that.
Look at where the market's going now. You don't want to be holding that. Believe me, believe me, you don't want to get caught holding the bag on something like that. We'll wait and see exactly how this one pans out today. But as far as I'm concerned, one pretty good crude oil trade. We're not going to get a chance here. It looks to me like this E-mini Dow is definitely leaving the building. And then we'll go right here to our crude oil. I guess we could have held it, but this is completely news-driven right now. Traders want to be long crude oil as opposed to short, and it all has to do with Trump basically threatening to bomb Oman earlier today. Crazy stuff. Iran prepared for larger warfare, fearing U.S. talks were cover for Israeli attack. Unbelievable. Unbelievable stuff. So the play probably would be to be long WTI crude and probably short U.S. equities going late into the late day. But I have to tell you that trying to hold a long position from the bottom of value there on the NASDAQ, it may really work for you. It may work. These markets may reverse. But right this minute, it feels like we're on pins and needles a little bit to open the week. I don't want to get caught up in some shenanigans on a Monday. That's the number one rule. So, all right. I want to thank you, everybody, for joining me. I know it was a little bit different time. We'll be back at the normal time tomorrow. But I do always like the week aheads. These are a lot of fun. We get to set the table. I hope you enjoyed the stream. The goal here is not really to make money today. I think we made probably $15 net after commissions or $20. Let's have a look. What do we make? See, order history, balance history. Let's have a look. Yeah, here we go. So we made $100 on the crude oil, $10 commission, $5 commission on the WTI, or excuse me, the NASDAQ, $60 loss. That was pretty good, $5 commission there. So all in all, not really too big of a deal. You take a look at today, we're up about, what, $10, $20. Believe me, you're not going to sell many tickets taking $10 or $20 out of the market on a given live stream. But for me, Mondays don't really count anyways. Tuesday, Wednesday, Thursday is when we're going to look to stack chips this week. FOMC Minutes live on Wednesday. You're definitely going to want to tune in for that. Thursday, we've got a rally-based rally workshop. A lot of you really like ICT concepts. That's one of the ICT concepts I can stand. Most of them I don't really care for, but the rally-based rally, I really like it as far as a bullish trend following approach. And when you couple that with Fibonacci retracements, you can have yourself something really strong. So I'm going to have a lot of fun there. Ralph H., good to see you, Ralph. We're just finishing up. I had to go an hour early today. I apologize. Have some things, some business dealings I have to tend to, and also feeling a little bit under the weather. So that's sort of where we're at. As far as one last tip while we're here, while we're all dressed up, if you find yourself not feeling well, whether you're really tired or whether you're sick, maybe you've got a sinus infection, maybe you broke your leg or your arm, maybe you're coming off of a separation, a divorce, maybe a family member just died, maybe you got food poisoning, maybe you got in a car accident, maybe your house burned down, whatever it may be, maybe your favorite team lost, maybe your football team lost. If you don't feel like you're up to it, you don't trade. Because when we're not focused on what we're doing, unless you're a pure systems trader, you're more than likely going to run into trouble. So if you're not up to the task, don't even take it on, because the only thing that makes you sicker than maybe a sinus infection or maybe food poisoning is losing a big stack of chips. When you're not feeling well. I always say, hey, listen, this market's tough enough as it is. I would say if you feel 80% or better, you need to go to work. But if you're under 80%, unless you haven't run an automated systems or EAs or something, you need to scratch it for the day. All right, that's sort of a word for the wise. I've lost a lot of money being sick before. That's no fun. This is something that we're working on here that I did want to touch on. I don't know exactly when this is going to develop, but a lot of you love EAs. This is our 9 EMA strategy EA, and one of my favorite strategies is the 920 EMA crossover. And it looks to me like there's a way where we can combine the efficacy of both. Where we can have those 9 EMA entries, but we may be able to filter them potentially with entries that deal with like a 920 crossover. This is exactly this type of setup right here. This is your Switch Markets MT5 platform. Something like this right there. So there's your signal. So your qualifier would what? Be a 9 crossing over the 20. That keeps you out of that chop. That keeps you out a lot of that chop. It can help you really find turning points in the market and potentially pick swing highs and swing lows that are effective. It can also help you stop from fighting trends. since we developed the 9 EMA strategy and put that one out, we didn't develop it. I mean, it's old, but we sort of put our spin on it, or my spin on it, with the RSI confirmation device. By far, we've traded this thing a lot during this year. I kind of like it. I think it's a decent way to trade. It can help you when the markets are really volatile, maybe to scalp. But as far as taking in your game to the next level, the 9 EMA often puts you into trades when you're fighting a trend, and the RSI doesn't really help you because in a trending market, RSI is typically overbought or oversold. That crossover, that 20, now we may have something. So I'm looking forward to that. I think that could be a lot of fun. I know it's a lot of filters, but guys, when you're scalping maybe 1-minute charts, maybe 5-minute charts in real volatile markets, I think 2 filters isn't a bad thing at all. I think that could really help you, especially if you're looking at maybe an abundance of 20 or 30 or 50 trades a day. Why not throw out the worst? If you're looking at 50 trades a day on a tight time frames across 5 markets, why not throw out the 40 worst? Give yourself a shot on the 10 best. Just a thought. All right, everybody, I'm going to go ahead and sign off. If you need anything, let me know on over at howtotrade.com. You can send me a private message, and I'll get back to you in short order. All right, I appreciate your patience today with the late time train change. Just having a little bit of trouble physically here. Be back tomorrow at the normal time. Also, I think that FOMC minutes is going to be a big deal on Wednesday. We're going to probably sit and trade that one for a few hours. But today, plus 15, nothing really to write home about. I call it a win for a Monday. I really do. We should have got that first gold trade, and we didn't get filled. That was a banger. Selling 28s was a banger. All right, everybody, have a fantastic session. As always, trade the action well, and we'll talk soon. See you.